Right now, Sanjay Lodha, Chairman and Managing Director of Netweb Technologies, is joining us. Sanjay, good afternoon. Thank you so much for your time. Now, I was just looking at a very detailed presentation shared by you, and you are one of the listed companies which is in the field of very high-end computing solutions. So, no wonder your numbers are showing very high growth. Talk to us about this quarter and this massive growth in the top line, margin, EBITDA. Do you think it is sustainable?
Yeah, actually, basically, if you really see, it's not basically the kind of growth we are showing. If you see, we have been growing approximately at a 40% CAGR, actually, if you see year on year, basically for last approximately 2 to 3 years. Okay, and basically, if you see the factors are also like that. The supercomputing is growing, the supercomputing adoption is increasing like anything. This quarter was definitely basically company achieved its highest ever quarterly and annual income and profits. And as stated earlier, AI system is now really the third pillar actually. The first pillar was supercomputing for us. The second pillar is private cloud and HCI. The third one, AI systems has also really gained, and we have gained by around 2.6 times of our earlier revenue actually. And so it has been a very, very progressive growth, and basically primarily all the factors which are really, if you see the areas we are into, they are really promising. Like if you see today, you see a massive data center boom in the country. I have not seen this kind of data center boom in the country. It's very difficult to even find data center space in the country now. So that is all basically, that will all attract our business on the supercomputing and the private cloud. Okay, and the AI, you understand that how it is evolving. Since we already signed up with NVIDIA for manufacturing the Grace Hopper systems, actually, we are the only one to have that kind of agreement with them, which basically manufacturing that. So basically, so we are seeing a lot of the areas we are into. All the areas are really because the thing is that we are
Right.
very focused. So that is helping us to keep a growth momentum on.
Sure. So, Mr. Lodha, you talked about the various drivers of growth, right from data centers, which is really picked up in the country, to the fact that AI is becoming a larger part of your contribution. Given all of this context, what kind of growth rate do you anticipate? Do you anticipate even a faster growth rate from here on? Because you've already doubled your revenue almost in this quarter, 60% plus for the year. Given these tailwinds, it's likely to continue?
Yeah, actually, thing is that we expect to grow around by 30 to 35% approximately. That's the thing which I would like to comment. If you see our order book, actually, our order book has really grown like anything. It was around 70 crores last year in the same quarter, and now it's around 411 crores. Okay, so that's basically a fabulous increase in the order book, because we are receiving constant orders from all reputed organizations, and basically because we are present in both the government as well as in the private segment, the business is almost on 50-50 between both the segments. So we are seeing tractions all across the segments, and AI is again fueling our growth, and that's basically the third pillar, which I have been always been mentioning that it will become a third pillar, and it has become the third pillar of our major segments.
So, what kind of top line and profit targets have you set for yourself internally? As I see, total income for this year ending is 750 crore with a profit of 76 crore. Say 2 to 3 years far out, what kind of numbers internally have you set for yourself?
Actually, thing is that basically, as I mentioned to you, we are really looking at a growth of somewhere around 30 to 35% CAGR actually, which we will build on the top line side. And as regards basically our PAT will remain between, because basically if you really see our basically operating EBITDA has been somewhere around 14%, and basically which is much more than the normal industry, because we don't have local competition. Primarily the competition is with the MNCs. So we will be maintaining that number actually, and on the PAT side we have been 10% plus, and we will like to maintain that. So basically there can be some few basis point up on the margin, but primarily margins will be, we plan to maintain the margins at the same level, because basically I feel that we are basically getting sufficient good margins, and we will continue that. Our top line growth will further add in more value, because last year I had projected around 60 crores as my margin. If you see, we did around 75 crores. On the top line also I had predicted around 600 crores. We did around 722 crores. So I am quite confident with the kind of momentum and the growth, and the kind of basically our new plant, as I mentioned to you, our new plant is getting basically inaugurated maybe this quarter itself.
Right.
So
Sure.
all that will really help us, yeah.
Yeah, Mr. Lodha, but just last question before I let you go. Almost half of your IPO proceeds are still unutilized. What's the plan to deploy that, and what's the timeline?
Yeah, so basically if you see my IPO, basically we had projected to basically set up the plant in year 25, but we have preponed that. So the plant is getting basically commissioned now, and that is there. And plus, basically, all the other proceeds also will be used. We are trying to prepone that. In this year, I think we will be using most of our proceeds.
Okay, so that's the take coming in as far as Netweb is concerned. Thanks, Mr. Lodha, for making time and speaking with us.
If you like this video, then like, share and subscribe to ET Now.